Welcome to Walker's Market Weekly. I'm RK Walker, coming to you from my home while the New York Stock Exchange's floor is temporarily closed, bringing you a review of this week's stock market. Over the weekend and on early Monday, markets got some welcome good news in the control of the coronavirus pandemic. New York Governor Cuomo said that the number of daily deaths remained flat for 2 days, while Italy and Spain's new infection rates slowed down from the prior day. Markets rose strongly at the open and then surged just before market close, with the Dow Industrials ending 1,627 points higher, or 7.7%, and the Nasdaq Composite gaining 7.3%. Oil prices fell sharply after a meeting between OPEC and Russia was rescheduled from Monday to Thursday, with West Texas Intermediate crude dropping 8% to $26.08 per barrel. The situation with crude oil is becoming increasingly dire as both excess production as well as lack of demand continues to use up all available storage. Gold continued to rally, ending up 2.8% to $1,665 an ounce. On Tuesday, the JOLTS job openings report for February declined 1.9% to 6.882 million jobs. Markets were extremely volatile as the Dow Industrials opened and rose more than 900 points, but finished the day down 26 points. Analysts continue to flood investors with conflicting opinions, with some believing markets will set new record highs before the end of the year as a rapid recovery is imminent, while others are predicting a depression-like environment with stocks still way too high to represent good value. Nevertheless, New York's rate of new coronavirus infections slowed for a third straight day, increasing optimism that the worst may be over for the state. The yield on 10-year Treasuries gained 7 basis points to 0.72%, and West Texas Intermediate crude fell 7.5% to $24.13 a barrel. On Wednesday, the EIA Petroleum Status Report for the week ending April 3rd saw crude oil inventory rise 15.2 million barrels. The Federal Reserve released minutes from its March emergency meeting in which it lowered its interest rates to close to zero, and it reassured investors that the Fed will continue extraordinary measures to ensure a liquid financial system as long as the pandemic drags down the economy. Senator Bernie Sanders dropped out of the presidential race, and investors also viewed that as a positive on the assumption that some of his more progressive policies will not get implemented. U.S. crude surged over 11% to settle at $26.30 per barrel on reports that the OPEC Plus meeting will discuss output cuts of 10 million barrels per day, while the Dow Industrials rose 779 points. On Thursday, jobless claims for the week ending April 4th remained higher than expectations, coming in at 6.6 million, about 261,000 lower than the prior week's record high number. Consumer sentiment for April dropped a sharp 18.1 points to 71. OPEC Plus reached agreement to cut production by an unprecedented 10 million barrels per day in May and June, and 8 million barrels a day from July until the end of the year. Interestingly, their cuts aren't contingent on non-members of OPEC Plus also cutting production. Despite the large cuts, oil prices still fell substantially as investors worried that the cuts weren't enough due to the collapse in worldwide demand. West Texas Intermediate crude lost 6.3% to close at $23.50 a barrel. The Federal Reserve announced a massive new round of moves designed to backstop the economy and inject up to $2.3 trillion in financing, including plans to buy corporate bonds and set up facilities to encourage banks to provide loans to mid-sized businesses. Markets responded positively, with the Dow Industrials ending the day up 285 points. Thursday marked the end of the week, with markets closed on Friday for the Good Friday holiday. For the week, the S&P 500 surged 12.1%, its biggest one-day gain since 1974. The Dow shot up almost 13% for the week, and the Nasdaq Composite had a weekly gain of 10.6%, its best week since 2009. This is Walker's Market Weekly. I'm RK Walker, and I'll see you again next week.